I would like to start from the beginning. Sadly, since 2008, the shipping industry could not anymore rely on the traditional asset-based financing. The lending capacity of banks being affected both by shortage of liquidity and by stricter new regulation, which required banks to maintain additional capital buffers. I would like to ask to Mr. Philip van Ersen, I hope I pronounce was, Direct Transportation South Europe, ABN AMRO. If we can expect more interest from banks in increasing their shipping portfolio, and what are the peculiar aspects of the Italian shipping market from the perspective of an international bank?
Thank you. Well, what we actually see is that I think interest rates have come down lately, but we expect, or what we see in our bank is that that funding costs are increasing again. So we actually it's becoming more difficult to price competitively at for international shipping companies, and also the regulations are stricter in the capital we need to reserve. So that's a trend I acknowledge, and which it wouldn't surprise me to see interest rates going up again. What I also see, and I'm curious to hear maybe in this audience, is that Italian banks seem to be becoming more competitive again, which I hear is partly due to lower ECB funding costs they are able to attract, and not for all Italian shipping companies, but they try to, I think, fund the quality names, which is difficult to compete against as an international shipping bank.
Thank you, but as far as your own bank, I saw from the slide prepared by Fabrizio Vettosi that you are roughly stable with your investment in shipping. Is it correct? And what is the strategy? What we can expect in the next future?
We are actually growing. I don't know where Fabrizio got his numbers from, but I think we're
Just, Philip, just because you are my banker.
No, we're steadily growing, and that's also the ambition to follow the especially our existing relationships, but also growing our business. Yeah.
And just short information from your perspective or international bank, there are concerns about the Italian flag.
I think it's also due to maybe not being completely aware of all the legal implications of Italian flag. So if that's a requirement for a finance, then it may pose some problems. And if we can get comfortable with that may give us more opportunities in Italy.
Any other considerations so far? No. Yes, please. So.
First of all, I'd like to thank the organizer for having us here. The thing about the financial sector, which I was very impressed by Fabrizio's presentation, and also with the actual aspect about making the parallels. We shouldn't forget that shipping is a long-term business. The problem, I think, which is arisen, I think, has been quite predominant the last maybe year or so, is the fact that insofar as that, Fabrizio, you mentioned earlier in one of your slides that you should sell, the equity markets want to sell the ships by buy the shares. Well, one bit of advice which I would add, which may be more effective, which is old and probably going back for half a century, in all sectors of the markets is buy the rumor and sell the fact. I think that way, I think it's perhaps a bit more simplistic, but then you overcome the fact that of all the problems which we've risen today are all self-inflicted. You know, become greedy, of competing, trying to keep up with the Joneses and buying ships at unrealistic prices. And I think once you need the ability of maintaining that principle in life, commercial life at least, anyway. Thank you.
Diego, I saw that Philip made a question, let's say, and I think about Italian banks being active or not. I think the reply is in this conference. Do you see any Italian bank here? I don't think there is any bank speaking Italian at this conference, and I'm pretty sure Francesco did invite everyone. So that's the simple reply. So I think you will still have a lot of room to play with interest, with margins, because especially on the Italian market, if you are brave enough, let's say, to, how do you say, to convince yourself that the Italian flag is not the devil, you will definitely find market share on the Italian market, still.
Thank you. Now,
George,
sorry.
Just a bit comment. As my professor at university said, the best companies go private. The worst companies go public.
Oh, something more on the flag, let's say, just to add you more comfort. I don't know if you are aware that quite shortly changes will go into this Italian tonnage tax scheme, which will basically enlarge to any European community flag, which for sure, let's say, will bring many, many Italian owners outside from the flag.
Please, John Lewis.
Thank you. Well, since we are in the house of God and God is the truth, we have to be very careful here and perhaps confess our sins. But I agree with George that a lot of sins have been perpetrated by ourselves. As he said, a lot of this malaise and this pain that we are suffering now is self-inflicted. I just wanted to add to what he said a bit of history, because it's always been the case that financial institutions have backed away from shipping in hard times. You know, I mean, I remember the 80s, and most of us do here, who have white hair. And this is something that is expected. In effect, if you remember, before the 80s, there were a lot of American banks financing shipping, and now there are none. So this is something that, as George said, for an experienced ship owner who is in this for the long haul, and this is really, I think, the kind of people that the banks who have financed them are in no trouble at the moment. You have to be there for the long haul and hopefully be with a bank that knows the business and itself is in good shape. And I think that last point is what I could say is particular about this crisis, is that the banking system and the banking sector in the West especially has run into a lot of problems since 2008 in other sectors, not in shipping. And shipping has suffered as a result of this unfairly, because our track record is very good, if one looks at it, and I think Fabrizio has. And we are suffering at the moment, in effect, for the mistakes that the finance institutions and the whole sector, but ourselves as well, have made over the last 10 years, taking into account that we had the best ever market in the history of civilization at the beginning of the century.
Because thanks to John at Excel level and also by the contribute of Manuel Grimaldi, we signed our position paper, attended the consultative session, finding and trying to change some rules and respect the shipping credit exposure treatment.
Thank you. Now, Francesco Fuselli, Managing Director di Banchero Acosta. From your observation point, which are the shipping segments that banks may be more interested in supporting?
Before replying to your question, I would like just to reply to Fabrizio's comments on selling vessel and buy assets, because yesterday we just made an exercise in our investment team, and we have assessed, we just made this simple exercise. What was the result of buying a Panamax bulk carrier in 96, 5 years old, and operating for 20 years, scrapping today? The result has been 22.3% per year as average. That is not bad. If you also take into consideration that same result investing $100 in the New York Stock Exchange, we result on half of it. So that is just the reply of it feels better to bet on steel or on shares. And with respect to your question, Diego, I don't know, non so se avete quella diapositiva che avevo preparato, but
There should be a couple of slides.
yeah, okay, but just one slide, a very simple one, because unfortunately, the few lenders that are still around, Philip is among those, but few left, unfortunately are our gentle ladies. They are following the fashion. And apart some cases, nowadays they are very bullish on the tanker market, even if on long term they are not. But to finance a bulkers these days is really a mess. Last talks that we have with US bank was 25% max leverage on a bulkers today, if you're lucky to find one. So 25 max. And so we have made, just to reply to your question, we have made this simple exercise in trying to understand what would be the net cash flow on a different type of vessel, tanker and bulkers, for the next 3 years, and is hot air for the shipping expert, probably less hot air for the legal part of this audience, but the results is quite easy. Assuming a resale acquisition today employed for on TC for the next 3 years. The result is that the net cash flow for Suezmax is a positive income of $11 million, 8 million for an Aframax and 2.2 million for a product tankers, while all the bulks are obviously losing money from the $2.8 million of Handysize till the 6 million losses for Capesize. I would like just to tell you that because bankers today are asking borrowers to give evidence to support this loss in the next short period. So there is no chance to try to finance a bulker if you do not prove that you have a minimum liquidity in a separate account that will permit the lenders to support you in this difficult period that is fronting you. That's it.
Thank you very much. Now there is Giuseppe Rizzo to...
Thank you, Diego. I would like to thank Francesco for the kind invitation, and I think this is a perfect site where we can see a combination of Italian art tradition together with the shipping tradition, which is a very long-lasting tradition, not only for ship owners, but for the entire maritime cluster in Italy. And I noticed very well the presentation of Fabrizio, and I think that definitely, we have to live with the fact that the shipping and the ship financing is totally changing the skin in the past years, and now the big question mark is who is the right financial partner in the future for a ship owner that like to keep a long-term tradition like in the past. And I see a lot of different opinions around, a matter of fact is, as Angelo highlighted, that around the table here we are not seeing the Italian banks. Where are the Italian banks? The Italian banks were the banks that pumped the big development of the ship-owning investments in the past years, but now are disappearing from the scene. And who are the replacement players? So this is a big question. And I believe that, I think that what I can say as a ship owner, representing a sixth generation company in shipping, is that the wish of ship owners is to find financial partners that can be funds, private equity, stock listing entities that are supporting a project which is long-term. So this is the main goal of a ship owner. Not falling into a speculation game like we are seeing at the moment, where the game is more based on asset playing. So we have to find financial entities that are trusting in shipping operating game, not in shipping assets playing game. So this is really where I would like to highlight the focus of the people, and I also think that sitting in a country where there is a big change also in the industrial politics, I think that now is the time for doing more lobbying within the Italian maritime cluster and the Italian shipowning cluster towards the Italian institutions, because I believe that we have to find a way to direct really the financial institutions to retake their initial role to support the industry through good weather and rough weather. That's it.
Thank you very much. We have another comment.
I think that's exactly it, and several people have touched on this. I represent Breakwater Capital, and we are exactly that. We are a primary lending fund exclusively focused on the shipping industry. We focus on every single subsector of the shipping industry: dry, wet, container, specialty assets, gas, in addition to offshore, whether those be platform supply vessels, anchor handlers, probably not focusing on those too much today, also jackups and semi-subs. Transaction sizes of 20 to 150 million US. And I think that listening to what everybody said here, the takeaway that I have is that really the first driver for ship owners should be securing patient capital, and capital that understands the industry. And there seems to be sort of across the board, not only in Italy, but a reluctance to accept a little bit of the new world order. It's a bit of a tough pill to swallow in terms of pricing that is more in line with traditional high-yield credit instruments. But that comes with a little bit of extra flexibility. And if you're able to sit around the table with people who understand your industry and speak your language, I think that pays for itself. No, yeah, exactly. That's it. That's exactly it. No, Fabrizio teed it up very well in terms of the general trends. And I think that, a few people have referenced public issuance and sort of IPOs, and I think what's so frequently happens is that people bake in an IPO as an exit in a base case, which is just, it's frivolous. An IPO should be at best a high case. There are so many players out there in New York and Oslo who have had their fingers burned, both on the equity and the credit side. I think that you've seen so many of these funds participate in the secondary credit markets, and they baked in a low case, but what they didn't bake in the low case is the lack of liquidity. And you look at the dry bulk market today, you look at so many of these credit funds that acquired these portfolios that said, okay, well, in a low case, we'll just exit and we'll sell to an industry player. We won't necessarily bake in a negative carry cost throughout the trough of a market. And they're stuck with it today.
Thank you very much for your comment. And technical issue. May I kindly recommend speakers and panelists to speak at a slower rate for translation purposes. Thank you. Now, the private equity investment in shipping have progressively grown since 2008, with a peak in 2013. Ship owners and private equity funds have very different business style, but there should have been sufficient time for each party to better understand the other party needs and strategies. I would like to ask Angelo D'Amato to tell us if, in his opinion, the chemistry between ship owners and private equity has improved. And I have a second question, which I anticipate. How do you evaluate the support of the banking system in the process of restructuring the debt? Of course, I start with Angelo, but I would like some further comments from the audience.
Grazie, Diego. What I want to say, I think we were among the few in Italy who did some stable, let's say, cooperation with private equity funds, let's say, originated in Italy. And our experience was all in all not that bad, was positive. But because there was a sort of sharing view, and this was a sort of, not say silent, but stable, patient. And by the way, it's one of the reasons why, let's say, myself and Fabrizio became friends, because our, let's say, business friendship started in this kind, let's say, of occasions. We are veterans of that. I think the first deal lasted something like 20 years ago. And I think I was the one who did the best ever return, let's say, for your equity fund so in another life. What I see today, frankly speaking, I'm happy, and I will say something to Francesco in his very, very brilliant presentation. I mean, today the attitude is totally different. What people who is approaching the Italian market, or in general the market, I mean, they try to sell themselves as private. They are not. They're hedge fund, they are turnover, they are, I don't know, turnaround, they are speculative. So they have a total different approach to what a ship owner needs, so stable profile. I think I'm sufficiently old and, let's say, enough to understand that I cannot ask if I'm in trouble. Let's say, of course, you have to discuss on a realistic basis. But what we have seen until now, it's something which doesn't make any, frankly speaking, cannot even consider this as something to be, let's say, seen as private equity. We met a lot of hedge funds, turnaround people who pretended to buy at, let's say, to reverse entirely on the shoulder of the selling banks and also of the poor owner, let's say, their expectation to get paid the return of 15, 17, 16. And I'm sorry to say, Francesco, I'm very happy to see that you are studying a model in which you wish to join together banks willing to sell with funds or knights willing to buy and owners in between. As you said, possibly, let's say you're talking white knights, maybe we needed a Merlino wizard in that respect. It's a dream, because you are talking of people who wants, by definition, get paid in advance 50% by year for 1 or 2 years, with banks who still pretends to make money from restructuring agreement, and owners who are in between and are simply considered like a problem, not really a partner, because let's say, and which are very often obliged, let's say, to go or to take a recourse to these, let's say, protection procedures or bankruptcy procedure, because, let's say, otherwise you are left in between, and then you are simply required, let's say, to get out of the door and, let's say, give your fleet at the possible cheapest, let's say, value without taking in consideration. And thanks God we are sitting into legislation which is quite protective for the owners. I mean, the Italian legislation and flag. Otherwise, if it would have been a single SPV sitting into any kind of international registration, we would have been. I'm also quite curious to understand how you believe it's possible to do something which is Chapter 11, let's say, proof in this scheme, because I think it's, I don't know, whether there is a legislation, let's say, allowing that, I don't know. It's a different story, exactly. So we're talking of something which, I mean, the problem today that we sell, I mean, what we see today is something which is not private equity. It's something different, and frankly speaking, something we will not get will not share in any event the needs or the desire of ship owners. Diego, you told me something on the Italian banks. What? Sorry. Good question. Talking with people who are believing that the process of restructuring of a financial position is a gain opportunity rather than, let's say, a saving or stabilizing company, which means that all these processes are lasting ages, and what the ship owner, or in general, I think any industry needs is stable, let's say, square in which you can work. And on the other end, let's say, nothing is really changing. So the support, it's minimal. But unfortunately, the problem is that people who are dedicated to this file are in many cases not shipping people, which means that sometimes they believe, I can tell, let's say, some recent experience we had with banks who were asking auditors and experts to make stress tests on exchange rate for shipping company which have 100% of the incomes in dollars and 99% of the incomes in dollars. So, I mean, that's the kind of difficulties, let's say, we see in the industry. All in all, I think that apart a couple of names, let's say all the Italian shipping companies on the international trade are in this kind of process. I think only one or two has been got the conclusion. Let's hope that in a very near future there will be some more. But again, it's a matter of culture, and by the way, let's say the one who's becoming rich as well is again Fabrizio, who made this new, let's say, dress and skin, becoming advisors of most of the shipping companies. Grazie.
Thank you very much. Very interesting, Angelo. And there is a comment from Francesco Lauro. Thank you.
Yes, because of the time schedule, perhaps we'll comment more with some of you over lunch, but I just wanted to take your... would you have thought that some Philistine like us 7 years ago would have been here speaking in front of Caravaggio, Seven Works of Mercies? I think the Holy Spirit can always surprise us. But in this sector, I tend to believe what Adam Smith believed, that greediness can be also a very useful factor. I think here, if we are realistic, there is opportunity to make a lot of money together to rescue this sort of situation. Some of the lenders, they have to be realistic, but in equitizing or becoming stakeholder in respect of their write-off, they could even have a profit, get back all their money and even a plus, just finding a point. I'm not really... I think I'm the last person who could speak about the Holy Spirit, but I think there is something. And with a little bit of cooperation, using also the evil force of greediness, I think there is a point. And this is not an act of mercy, it's just an act of realism. I think we should talk about the White Knight Fund, and we could find the equity needed to make it to work.
Francesco, I try to be extremely realistic, so I agree with you. There are possibilities, there is time to work and things to do, but let's say, I can tell you my own experience. I always met people who wanted to buy loans at 50% of the asset underlying value, and with banks which were willing to sell these loans at 120%, let's say, of the vessel's value. And especially, let's say, into any, let's say, procedure, let's say the selling value of the assets, even into a distressed bankruptcy, it's by sure more than 50% of of what you can achieve, let's say, by selling the loans. So most of the banks at the moment, in my experience, are not willing or ready to sell unless the buyers will decide to become more realistic. And again, let's say the value of the underlying assets, which, by the way, everyone is aware, it's, let's say, at the lowest level in the last, I don't know, 25 years. We did something also, etc. Let's say should suffice. The problem is that, which means if you want to buy a non-performing loan at 90% of the vessel's value, maybe you will succeed. But if you want to buy at 40 or 50%, which means 10 cents on a dollar, I mean, the seller will say, let's go this company to bankruptcy and I will get more, and maybe faster. And by the way, I will not take any decision I will not bring, which is also very important, sorry to tell me, I will not take, let's say, the obligation to go to my board and explain they have to lose 90%. There will be a court telling this to them, which is something which please do not undervaluate whenever you enter in the mind of the Italian banking.
Angelo.
I think we will need other discussion upon this, but I think we need a global agreement.
Ships aren't buildings, as correctly stated by Mr. Mitropoulos this morning, are technological workplace. This is the problem.
There is another short comment from Giuseppe Rizzo.
I would like to say that, just to add to what Angelo said, that in my opinion, the Italian banking system has been so far very supportive to special situations and to critical situations, because, if you were sitting in a different environment, in a different law framework, we would have been seeing, totally different approach. What I would like to say is that most probably what we need a more, let's say, more cooperation between ship owners in terms of trying to, through also let's say, an action towards the government, to try to explain a little bit deeper and to find, a common leading scheme in the discussions between the owners and the banks, because, you highlighted the very important thing that most of the people that are sitting in the restructuring tables are people that are not really focused on the business, and you need to have somebody that is willing to understand that today is the wrong moment to sell the assets. Maybe if we are talking about dry cargo, I can say that for the next 2 years is the wrong moment to sell the assets. This is a cyclical, industry, and you have to keep patience. It's very important what you said about the need for patience capital. I think that this asset, let's say, S&P scheme of the credits of the loans is something that is really spoiling the mentality of the banks, even in Italy, because at the end of the day, whoever is interested to replace the banks at the moment around the tables in most of the cases are people that are not thinking about a continuation of a company, but are thinking about the liquidation of a company. So as ship owners, we have to look into something totally, totally different.
Thank you. There is Francesco Moneta, Vice President of Lazard, who wanted to deliver a comment on this subject, I suppose. Then I have another question for you. I prepared another question. Do you think that the work of financial advisor will change in the near future? Will they be engaged in loan negotiation with banks or more involved in new and added value consolidation projects?
Thank you. Let me first make a sort of recap of what I heard this morning. Very scary messages and slides, as Fabrizio provided us. Banks are escaping from the sector. The IPO is not really helping companies. Bonds can be a solution. Long-term capital, as said, could be a solution, but I don't think that could be a solution for all ship owners. It's of course a solution for the shipping industry as a whole, but it's a matter of valuation. I'm not sure that all the solutions that you suggested and other funds, more shipping-oriented, are providing to the industry works for any single company, simply because, again, it's a matter of valuation. What Mr. Lauro suggested is theoretically true and can work, but again, as Mr. D'Amato said, it's not really feasible from a negotiation standpoint vis-à-vis lenders and from a also financial standpoint. Just to reply your question, yes, I hope that in the future the financial advisor role will change. I spent my last 5 years with ship owners trying to negotiate vis-à-vis lenders. I saw most, if not all, the dynamics that you all said and represented this morning. Hopefully, consolidation in the future could help to bridge the gap between the value of the loan and the value of the vessels. Thank you.
Thank you very much. Well, it is self-evident that the entrance of private equity investors in shipping has been a hot topic, as I said before. The fund in general are blamed, for instance, for their opportunistic approach and for having feeded a new tonnage ordering fiesta. I would like to ask to Guido Lorenzi, Director of HIG White House, are these myths or reality?
Well, I think as HIG, thanks for your question. I think as HIG, we are a bit of a special animal in the sense we do different things. So we have a private equity arm, or we invest into chemical tankers, so it's a niche market, and I don't think we have fueled the tonnage order book. As HIG Whitehorse, we are a private debt fund, so we lend to, let's say, performing or stress situations, so we are not a hedge fund. So from my point of view, I cannot say I see private equity fueling the market or funding a bubble. What I can certainly say from for what I've seen this morning, and as Francesco mentioned, we've seen loans, bonds, private placements, a lot of credit, and I haven't seen much equity. So if there are, I think, 2.2 billion of equity raised versus 340, 350 billion of credit, I think that this proportion is quite relevant. And, Mr. Lauro idea, I think, is bright, but I think, at some point, somebody has to take the loss and to restart. So what we are trying to do on a few situations is to support the owners providing new capital to partly fund the refinancing of the companies and support new investments. So we are a private debt fund, we are a closed-end fund, so we can lend 6-7 years money. We don't need to exit in a couple of years, in 12 months, as maybe hedge fund money has to do. But certainly, the sector is not easy. There are not many people looking at it. Banks walked away, and there are reasons for that. So it cannot come cheaply. Since senior debt went from 100 bips to 300 bips, and in my view, it might even be too cheap. It'll probably go up. And there is a reason for that, is that if you accumulate losses versus just interest income over the last 20 years, still is probably a big loss for everybody who lent into the market. So it has to be taken with caution. And but I think there is capital. We have capital, other funds, as Nino, have capital to support industrial projects in the medium long term. Thank you.
Thank you very much. And another short question. Which are the key drivers for private equity investment in shipping?
Well, that's a tricky one. I think, the difficulty we are facing is this is a cyclical market, and it changed a lot, and it can change quite quickly. So you have the difficulty of getting into something long-term with short-term visibility.
And that's why you need to have good downside protection and also be paid enough to justify the risk you are taking. So from my point of view, what we are looking for is, I would say, decent risk profile. I don't think we are overly conservative, but we're certainly not gonna buy into the, we're gonna exit in 12 months with an IPO case, because that's pure upside and it might happen or not. And we will look at robust cash flows or, at cash put aside to fund a difficult situation or an underperformance of the company or the market.
Thank you very much.
Thank you.
May I ask you a question, just very quickly? I'm sorry. I mean, if I correctly understand, would you consider, let's say, to invest, for example, in a dry bulk, waiting to collect any coupon for a couple of years, having completely clear in mind, and I think fully of evidence, that whenever you buy, whichever you buy today, you're buying the lowest level in the last 20 years, which means that any return will go back not from a paid dividend, but from an upside of the vessel. Grazie.
Well, I can tell you,
I am on diet since a few weeks, so I'm a bit nervous because I cannot get any carbs. So please excuse I'm a bit, hard.
I'm on diet myself, so. Well, I can tell you what we have been trying to do on a corporate, so not on shipping. But what we have tried to do was to extend the 6 years facility, bullet, so repayment is all in the end, and it would have been completely peak for the first 3 years. So we would have just got the money there, 3 years, you don't get a single penny of interest, and then you start accruing, maybe you get some cash back and you get repaid in the end. So I think that the sort of things we can do. Going back to you, but we have, if you want, a visible, robust asset underlying it. If we don't have that, we call it equity or semi-equity. And then it's different, because if you put your money somewhere where you don't have visibility of cash flow, you don't have visibility of dividends, you don't have visibility of valuations, that's equity risk, which you can do it, but it's obviously different from my personal job, which is land, but we have a private equity team looking at this sort of situations.
What owners need on a dry bulk is equity investors. That's exactly what you said. So there is no project in dry bulk, and from my opinion, even on tanker, because on the tanker, it's true that maybe the market is very good, but you are definitely by a very high level, and you can secure this return for a couple of years only, for the time being. So it's unlikely you don't find many players, for example, for 10 years. Which means that, let's say, what we need actually, let's say, it's equity funds, which means, which of course cannot be paid at 7, 9, or 10% as a mezzanine, but let's say if it is 25, we are more than happy to share this 25.
I mean, without being unpolite, but I'm on diet as well. If there is a need for equity, that's what entrepreneurs do. They put equity. I mean, you have private equity, but you also have corporate equity from entrepreneurs.
Thank you very much.
Can I make an observation?
There is a comment from John Lires.
Yes, I wanted to say that, especially in bulk shipping, more particularly in bulk shipping, it's a very traditional business even today. And effectively, it's name lending. And this is something that I think the banking system cannot support anymore, it seems, which is a very big problem. And it can't support it because all the regulations that they have and all the sort of capital adequacy requirements and all this, monster of bureaucracy and controls that now we are facing in all sectors. But I say this because this is the very big difference between, let's say, a corporate approach to our business, to shipping, from the banking system and from everybody else, which can apply maybe in the liner sector because there's a very big concentration there. And it is corporate. They are listed companies. And they are also an oligopoly. I am in the house of God, so I can say that, because it's the truth. There's a kind of 4 alliances that control 80% of the market. And in the bulk sector, it's mainly family businesses And there is no sort of concept of market share. It's totally volatile. So basically what you're lending is somebody's experience and operational efficiency. That's what you're really lending. And this is not the approach of the banks, and I don't know whether it can ever be, and it's certainly not the approach, I believe, of the other vehicles that we have seen in the last, decade or so. So this is a problem, and I think it's a problem that's fundamental, and I can only use two other institutions of shipping as an example. In a way, finance to shipping should be a sort of institution like a classification society, where the bank is not concerned about its own share price and its own profitability and its own kind of, if you like, future as a business, but it's there to provide a service. And it competes on service with other institutions of the same kind, like the classification societies do, but they are there to finance a sector that has particular requirements. You mentioned them, about long-term capital, about perhaps low returns compared to what you can get if you are sort of speculating with currencies and in the financial markets. I don't think shipping can ever compete with that. But it's a staple. It's something that the world needs. Themius mentioned this before. In the bulk sector, we're especially trading in staples. We're not trading even in sort of luxury goods or in consumer goods. So the world, if you like, and the West, if we consider that we are still sort of in a position to do this, should provide the necessary vehicles somehow. Because otherwise, I think Fabrizio said it before, I will have no incentive to teach my son to come into this business, and who will be doing it then?
Very interesting perspective. Thank you very much. And now I would like to ask to Gaudenzio Bonaldo Gregori, Director of Pillarstone. With reference to the market of secondary loan portfolio acquisition, is it possible to achieve a better alignment among the interest of the player involved, the PA investors, the bank, PA private equity, and shipping companies as well? There are any?
Thank you for the question, and thank you for this very interesting debate that, for me at least, is very, very interesting. The one thing I want to say is that it is clear, and we said with Fabrizio, we said several times, there is a trend. And from the traditional lending, we are moving towards capital market, equity capital market, debt capital market, a bond. And anybody expecting banks to come back as before and having that strategy in their strategy, I think is not going to fly. Because I do see actually the capital markets are becoming bigger and bigger, and the overall trend will be that the capital market will be the majority of any funding for any company, including shipping. We saw 69%, will be probably 30% in the long term. But we are coming from an overfunding from banks. We have in Italy, but not only in Italy, a massive legacy. The Italian banking system is sitting on 350 billion of distressed assets. So when we are asking where are Italian banks, they are quite busy managing those situations. And the discussion, quite interesting with Mr. D'Amato before, said, banks expect 100% recovery, bidders are at 50%. There is this bid between ask and what the banks are prepared to actually sell their assets that makes any transaction with crystallized value up front simply not feasible. And I've seen this gap in shipping, in corporate, and the gap is between 20 and 30%. Just apply that number to 350 billion. That means in the Italian banking system, you got between 70 and 100 billion that need to be sorted out. So anybody expecting banks and complaining with banks without realizing that we are facing this macro issue is simply, there is no solution. And the one thing we have done, I mean Pillarstone. Pillarstone is a platform fully funded by KKR, which is a private equity fund. And we are simply trying to address actually one of the many points that we have discussed today. gap between bid and ask on any of these distressed situations, and making the restructuring process much faster and slimmer, and stop focusing on processes and start focusing on business. Because I've seen several times that whenever you have a restructuring, it's never landing, it's frustrating, and people focus more on process rather than on business. Our platform is not a white knife, is not a magician, but I think we have a solution which proved to work, because we have just agreed with 2 Italian banks, which are the 2 major Italian banks, a transfer of 1 billion assets under our management. And there is no shipping, but we are discussing a number of shipping situations as well. And the concept is very, very simple. The assets are transferred to our platform. We agree with the banks a split of whatever upside and whatever we get out from those assets. So there is a split of our returns as well. And there is no crystallized loss or crystallized actually day one situation with 50, 80, whatever. That discussion is out of the table. We agree on how we share whatever we get out of those assets. And what we do, we provide long-term capital, because in shipping, but also in any turnaround, if you have short-term hedge fund type of money, you need to be out in 3, 5 years, doesn't work. Because the value creation on a cyclical business like shipping, but also in any turnaround, you need to be patient, you need to be there, you need to put new money if needed, but you need to actually help the company throughout the process. And we focus on business. We sit with entrepreneurs, we want to understand what the business requires. We just put the money required, and we just want the turnaround of the business, because the turnaround of the business means bigger value for everybody, bigger upside to be shared. And even if we are not magicians, I think we can close some of the gaps. That's what we do. And as I said...
Mr. Gregori, may I invite you to buy any shipping non-performing portfolio in Italy? Because what I hear from you is what we need. So what is really, let's say, stressing the industry is the fact that these processes handled directly by the bank are endless. And to add insult to injury, there's no one from the banking side who says, you are not capable. We trust you, we trust your capacity, nevertheless, we don't reach a conclusion. And for a company, that's regardless shipping, frankly speaking, for any kind of business, let's say, you need stability. Otherwise, how can you start, let's say, working again to develop your business? May I add something which I think is very interesting, which apparently seems to be not understood, frankly speaking, from the restructuring team. Different from real estate, I don't know, manufacturing, whatever. Vessels are goods. Very transparent and very, very volatile, and sold very easily, which means that values can recover. And it's not, let's say, dreams in the advisor. It's historical track records, let's say. This is something which means if a wise banker, if he has a trust on a decent owner, should simply wait, stay with him and wait. And since, let's say, the word decent owner seems to be more or less everywhere, let's say, understood, banks pretend to be wise, but I fail to understand why these processes cannot reach an end, which is too much, frankly speaking.
Any reply on your side? No.
Sorry, say it again.
Any reply on your side?
Yeah, sure. I mean, just to reply, I mean, I'm coming from actually have been doing this within banks. And one of the banks that I was working for is actually have been mentioned as walking away from shipping. So our business model, and that's why we sit down with KKR, we said, you know, this is what we need to do, and KKR is fully backing what we do as a team, is that banks at the moment have so many constraints that they are simply not able to, I mean, they have a lot of priorities, from capital, return. They're not able to actually understand, no, they're able to understand, but they're not able to satisfy what an entrepreneur needs, whatever corporate or shipping or asset-backed financing sector you are dealing with. So I think it's just a matter of being flexible in terms of not heavily also the regulatory constraints in terms of capital, willing to understand the business, working with entrepreneur, find solution, alignment of interest. That I think is a very simple recipe, but from my experience, it seems to work.
Thank you very much. A short comment from Nino Mauimekel.
Yeah, we started Breakwater by acquiring an Asian bank portfolio 3-4 years ago and made the decision when pricing ran away from us to shift our focus to direct lending. And I think that I'd be curious to hear from you that I think it's acutely important for people to also focus on the covenant package and the documentation. And I think that that's exactly what's happened. And that might be exactly why you're seeing the drag out in all the processes, because people are not only baking in just the economics and the pricing, but they're also starting to focus on the processes, the bureaucracy, and the covenant packages and the docs that they're stepping into. And I think that by and large, you're starting to see some of these funds grow primary lending platforms as a direct result of that, because they would rather lend the money directly themselves and put their own collateral package in place with their own covenants.
Well, thank you. Sorry, if I may, because I want to. Of
course you may.
Try again to say what is key is to focus on the business. So I think if you start focusing on covenant package, that's where drag the process. But I think is completely irrelevant on any restructuring. It needs to be fixed, but when you have a clear idea what needs to be fixed in the business, what is the new money or fresh money, as we mentioned before, is needed, you have a plan to invest, and you are both managing the credit, but both you have the best interest into the company. I can tell you the solution is straightforward because you have a vested interest, which are both as a creditor as a long-term value creation, and the covenant set is not an issue.
Thank you very much. Arturo Capasso, Università degli Studi del Sannio e Studio Legale Lauro. How will private equity players navigate the Italian bankruptcy and restructuring legislation?
Yes.
And will their presence finally support major turnaround in the ownership structure?
Yes. Regarding this, first of all, I have a question for Bonaldo Gregory. In Pillar strategy, I appreciate very much their strategy and their approach to the problem, but who is going to do the strategy? Do you follow the idea of the entrepreneurs, or are you consulting? Are you doing something with your consulting firms or another way? The recovery of a business is not an easy process. So probably you need a business idea or something to reorganize the business. So who's going to do this strategy? We will be the entrepreneurs in the process.
If I may, we have seen and restructured many businesses. We are not an expert on any business. So where our discussions start always, but let me do a step back. We are not doing, taking on assets on any asset class or any business. We only take assets in the platform if we think the business is viable, and we do believe there is a story for the turnaround and for new money to be invested to complete that turnaround. That's the level number one of assessment of any opportunity. Level number two always goes through the entrepreneur or the management team, and that is a discussion we are having as we speak. We're having a discussion with an entrepreneur which has a clear path of value creation, sitting with us to see what is required, do you share with us, and then you ended up actually either buying completely the entrepreneur view or also supporting their view with our view. Within KKR, we have 100 business in the world, 220 billion of turnover globally, so we have a lot of ideas and also input to provide. And then there is a combination that come up with the strategy, and based on that combination of strategy, which is our external advisor, entrepreneur, we just deploy our capital.
This is very interesting because in the discussion of this morning, I appreciated the contribution of Francesco Moneta, who first talked about consolidation. Consolidation probably will be one of the main issues in the future, simply because we've seen that the shipping industry has been an exception to traditional mainstream economic principles, because we have a capital-intensive industry with a fragmented market in many segments of this market. now probably this was allowed, this was made possible by the bank loan, because bank loan was very easy to obtain, and so a large part of the investments were financed by bank loan. Now, just after the credit crunch, after the crisis, we need a switch in corporate finance of shipping companies between debt, from debt to equity. But my question, and the intriguing question about the future of shipping industry, is what's going to change in terms of governance of the company? Because the difference between debt and equity is very easy. Equity changed the governance settings of the company. So how will the strategic management of shipping industry will change because of these changes in ownership and governance? And my idea, but this is an impression, I would like to have the opinion of many experts at this table, is that the shipping industry, the strategic management of shipping industry will be switching from art to science, more technical management, less the intuition, the capacity of the entrepreneurs. So this could be one trend for the future, and probably we will have larger companies consolidated with professional management. And I don't know if this is better or worse, but probably this is the trend. So I'm interested to know your opinion about this.
I just wanted to say that I am also surprised, being a Greek and being in a sector that is very successful and which is family, orientated entirely. I have always wondered why we are still around, I mean, I thought that we would be kind of gobbled up by the corporate giants long ago, but it hasn't happened. And I've been hearing this thing about, bulk operators, family business, they have to get together, they have to consolidate, they have to become corporate over the last 25 years, and it hasn't happened. So I ask myself, why hasn't it happened? And I say that probably because of the fundamentals of this business, which is the bulk transportation of goods, which is so open, so volatile, and so unpredictable. So even if you had, for instance, a professional manager, which we do, in fact, in our industry, who manage 500 ships or 400 ships, do they do any better? They don't, really. They're not more successful and they're not more profitable. So I think it's the parameters of world trade, really, in the cargoes that are transported with bulk ships that makes the family business, the small, flexible, and proprietary entrepreneurial business, the most successful model. And if you look at the economic textbooks, they cite the bulk shipping sector as one of the last examples of almost a perfectly competitive market. So everybody should be happy about this, even DG Comp, which they seem not to be most of the time.
Excuse me, I would like also to say something. I totally share the point of view of Mr. Liras, but I also, Arturo, I would like to highlight something. The equation of a ship owner is very simple. I mean, I think that we are falling in a too complicated scheme. There is no need for too many strategies. So the story is that we have to clean the desk. You know, the mess that was created in this business in the past years was, basically a concourse of a lot of things, from the banks, because we have also to be honest to remember that back in 2006 we had a line of people knocking the doors of the owners and say, buy the ship, I lend you 100% or 110%, I give you also extra 10% to buy the ship, okay? So this is a disaster created from the financing system, and now, you know, we have to come out of that. Now, the thing is very simple. We have to clean the desk and we have to resume the business the way it is, and there is no need for specific strategy. The only question is, just to, I address this question to Mr. Bonaldo Gregory, are we on the same page? You know, there is no turnaround of the owners, because if we are talking about restructuring as a turnaround or a scrapping of the management of the owners of the company, so then it's a totally different approach. There is no perspective of joint venture going forward.
If I just like to add or endorse what my friend John Liras mentioned. There's a term which they haven't put it in a Harvard Business School yet, but I use it in the street of Piraeus. We call it commercial drunkenness, emboriki methi. And that's basically, I think, one of the biggest culprits which has caused the issue of the last 20 years, because people don't realize that, as I mentioned earlier, it's consistency. It's a hands-on business. We don't have to prove anything to anybody. They're the winners. The winners are the ones who are low-key, long-term, like running a marathon. It's not a sprint, it's a marathon. Thank you.
Thank you very much. Time has finished for our session. Thank you very much. Personally, I am very satisfied with the quality of the speech and the interaction between the panelists. So thank you very much for your attention.